Let me start with the conclusion right up front. Tesla stock is not ignoring bad news. The market is simply valuing Tesla by a completely different standard now. And if you're still looking at Tesla through the old lens, today's headlines are going to feel more and more confusing. Hi, this is Ken. If you've been watching recent Tesla news and thinking something doesn't add up, you're not wrong. In this video, I want to explain why negative headlines no longer move the stock the way they used to, what the market is actually paying attention to instead, and how long-term investors should reframe Tesla from here. By the end, you'll have a much clearer mental model for interpreting Tesla news going forward. Let's quickly organize the facts first. Recently, the NHTSA released information related to a safety evaluation involving the Tesla Model 3. Some media headlines immediately framed it as another Tesla safety issue, or regulators investigate Tesla again. At the same time, delivery growth remains uneven by region, and some analysts have openly said near-term demand looks soft. Yet despite all of this, Tesla stock did not break down. In fact, some major institutions raised their price targets. That contrast is the starting point of today's discussion. Here's the first thing we need to be clear about. This NHTSA situation is not a recall. It's not a stop sale. It's not a production shutdown. The core issue being evaluated is whether the emergency door release mechanism in the Model 3 is sufficiently intuitive in an emergency. That's a user interface question, not a structural safety failure. From a business perspective, the impact is limited, but from a headline perspective, it sounds dramatic. This creates the first disconnect. The story sounds big, but the risk is relatively small. And yet, that alone doesn't explain why the stock barely reacted. So let's go one layer deeper. To understand what's really happening, look at how analysts are framing Tesla today. Take Deutsche Bank as an example. They openly acknowledge that short-term deliveries could remain under pressure. They're not pretending demand is suddenly exploding everywhere. And yet, they raised their Tesla price target to $500. That feels contradictory at first. Lower near-term confidence, higher long-term valuation. But it's only a contradiction if you're still using the old framework. The market has quietly shifted how it values Tesla. It's no longer primarily how many cars did they sell this quarter story. It's a how far along are they in autonomy and AI story. This is where many investors get stuck. For years, Tesla was evaluated like an automaker. Margins, deliveries, factory efficiency, competition, those metrics still matter, but they are no longer the center of gravity. Today, the core question investors are asking is this: is Tesla getting closer to owning scalable, real-world autonomy? If the answer is yes, then short-term delivery noise matters less. If the answer is no, then none of the optimism holds. That's why negative headlines don't automatically translate into selling pressure anymore. The market isn't blind, it's just looking somewhere else. Here's the part that surprises a lot of people. Some of the strongest institutional buyers of Tesla today are less focused on EV adoption curves than they were 5 years ago. Instead, they're modeling Tesla as a platform company, not just selling cars, but deploying intelligent agents on wheels. In other words, Tesla is increasingly compared internally not to Ford or GM, but to companies building foundational AI infrastructure. That comparison rarely shows up in headlines, but it shows up very clearly in valuation models. Now let's talk about where this leads. If full self-driving continues to mature, and if Robotaxi becomes commercially viable, the definition of a car changes entirely. A car stops being a depreciating consumer product. It becomes a revenue-generating asset. That shift impacts everything. Insurance models change, urban mobility changes, logistics economics change, and the company that controls the autonomy stack controls the system. Tesla isn't just trying to make driving easier, it's trying to own the intelligence layer of transportation. That's why progress in FSD matters more than quarterly fluctuations. So here's the question I want you to think about. What company do you believe Tesla is today? If you still see it primarily as a car manufacturer, then regulatory reviews and delivery slowdowns feel threatening. But if you see Tesla as an AI and autonomy platform, those same headlines start to look like background noise. Short term, there will always be investigations, regulations, and volatility. That's normal. Long term, the valuation hinges on whether Tesla succeeds in autonomy at scale. That's the real bet the market is making. As of today, markets are closed and Tesla is still sitting around the mid $485. No drama, no panic. If this video helped clarify how to interpret Tesla news differently, feel free to leave a like. And if you're interested in calm, long-term analysis of Tesla, AI, and the future of technology, consider subscribing. Thanks for spending your time with me today. And as always, try to think in years, not headlines. Before we wrap up, let me take a moment to introduce myself. I drive a Tesla Model Y, and at home, I've installed a Tesla Powerwall, so I actually charge my car with solar energy. I truly believe Tesla is shaping the future, and that's why I share the latest news and insights here on this channel. I'm from Japan, but I want to connect with Tesla fans all around the world. That's why I also create an English version of my videos. YouTube now lets you switch the audio into your own language, so you can enjoy it in whatever language you prefer. Most of all, I'd love to connect with Tesla fans everywhere so we can support Tesla together. I also share updates on X, so feel free to follow me there and let's connect. And if you haven't already, please subscribe to this channel. I'd really appreciate it. Thanks for watching, and I'll see you in the next video.